This is your LMAX Exchange technical update for Wednesday, September 7th, 2016. Euro dollar. So the euro is really just chopping around at the moment, not able to establish any clear directional bias. We've seen the market break down in recent trade below the 100-day moving average, but once again on Tuesday it moved higher back above the 100-day moving average. And this leaves things a little bit unclear at the moment. For now, it looks like it's going to take a break back above all the way that high that we saw on the 18th of August at 1367 or below recent support, which comes in around 1166 for clear directional insight. Until then, a lot of choppy trade and no clear insight. Overall, if you do look at this chart though, since the 2016 high, it looks like the market could be putting in a lower top at 1367 ahead of the next major downside extension back towards the 109s. But right now, Tuesday's bullish price action does leave the market thinking about a move to the top side. Again, overall, there is a slight bearish bias, but with the market breaking back above a 100-day moving average, we could see additional upside in the sessions ahead. Sterling dollar. So cable is trading up to some key range resistance around the 135 area. If you look at this market, it's been trading off those plus 30-year lows that we saw back in July, but overall mostly a bearish consolidation ahead of what should be another topside failure and break back down to retest those plus 30-year lows and potentially see a move down towards 125. If, however, the market establishes a convincing break back above 135.33, this could take the immediate pressure off the downside. Dollar yen. Dollar yen is doing what it's been doing over the past several months. It's been confined to a downtrend and looking for that next lower top below 107.49. That was the previous lower top that we saw back on the 21st of July. And that lower top could now be in place by that recent high that we saw around 104.32, which will be confirmed on a break back below that recent 2016 low at 98.99. At this point, it would really take a break back above 107.49 to compromise the bearish outlook. Euro Swiss. So Euro Swiss continues to be comfortable trading mostly between 108 and 110, and we need to see a break on either end for clear directional insight or for some form of a trend shift. Until then, look for topside failures towards 110 and for the market to be supported down on dips towards 108. Aussie dollar. So Aussie has seen a nice rebound in recent trade with the market surging on Tuesday. At this point though, it would be premature to get too bullish on Aussie while the market trades below 77.58, and a break back above that level would be required to force a shift in the structure and then expose a retest of the 2016 high at 78.35. Until then, it's possible we see another topside failure here ahead of an eventual resumption back towards next key support at 74.21. Dollar CAD. So dollar CAD has pulled back a good deal in recent trade, though overall there are signs that this market continues to put in a major base. There's been a lot of choppy trade in between, but while the market holds above 26.55, look for this market to be once again supported ahead of the next major upside extension back above recent highs that we saw at 32.54. Kiwi dollar. So Kiwi is broken up to a fresh 2016 high above 74, and this could open the door for a move towards psychological barriers at 75. The market is starting to look a little stretched, so we could see a topside failure here, but we need to now see a break and close back below recent support that was seen down around 72 to take the immediate pressure off the top side. SPX 500. So the S&P 500 is consolidating off a recent record high. The pressure does remain on the top side while we hold above some critical support at 2147. If the market does stall out here and break back below 2147, this would suggest that we're seeing a top and an acceleration of declines would be expected. But again, while the market holds above 2147, the overall pressure remains on the top side. Gold. So gold has seen an impressive surge in Tuesday trade, and overall this market continues to show a very constructive outlook, with the market once again being supported on dips, this time into the 100-day moving average ahead of what should be the next major upside extension beyond the 2016 peak at 1375 and towards the 1450 to 1500 area further up.